Hello traders, welcome to my channel. I'm Francesco. On TradingView, it's Forex Essential, and essentially I've got quite a few things to tell you about USD that I've been thinking about after my video yesterday on the same currency pair. So the first thing I want to do is go through some details. That's basically my video settings for yesterday. That's the channel that I was telling you about, how we've broken through the upper resistance, and essentially we are through out of that channel up to new limits. Obviously it's been a bit choppy, as you can see. We kind of bounced back from this level here, or actually it's not quite the same, so it's slightly lower than that. So let's dig deep today. So because yesterday I kind of went through the kind of classic TA technical analysis of the charts, etc., and ATRs and what have you. Today I want to kind of look at other things which I also look at other times, and that's basically going to some details about what information do we have on USD that's not just a spot FX price and looking at candles. We also have some way of having a look at centralized data, and by that I mean that I'm going to look at the FX futures side to get a sense of where the volume lies and what kind of things we can expect. I did a little sort of setup yesterday on one of the forums where I'm at, not the noobs, and basically it's this, which if you look at the Euro UX FX futures for March expiry, so the next kind of quarterly contract, you can see on the hourly that we've got all these lovely peaks there. And I tend to look at the hourly for futures volume because that really gives you a sense of the daily action. So just to compare, you can see all these sort of peaks there, 1, 2, 3, 4, and each one of these is basically like, if you look at that, you've got so Chicago time, that's something like 1 o'clock in the afternoon in the UK, and this is 8 o'clock, that's 2 o'clock, and that's 3 in the morning, 8 o'clock there, so kind of like early, and then you know, very early and it's that sort of pre-open essentially, and then 9 o'clock again. So we try to sort of do like with like, essentially, if you try and look for the same kind of hours. But basically you get 3 straight morning buys. That was the Friday, then Monday, Tuesday again a bit mixed, and then today was again start of the day mostly buy, but not so straightforward as this one here on the 5th of February. You can see the price action there, strong 1, 2, 3 volume rises, candles kind of follow the same path of rising price, and then it kind of whittles away as the volume fades. You can see that really clearly, and that's the sort of thing that we want to think about when we're looking at. If I go to the daily, you can see that not so easy to make sense for me personally of the volume bars, because it tends to be almost like alternate colors, green, red, green, red. Now there are 3 green bars there for volume and corresponding 3 candles for the daily volume for the bars, sorry, for the candlesticks corresponding to the volume bars on a buy uptrend there. But essentially it doesn't quite give you that sense of peakiness that you get from the hourly, where you can clearly see the peaks for each of the day, and where the peak is greatest, if price action follows the color of that peak, so in this case is buying, it's green, then that kind of gives you a sense for the day. If you go back, and I wish I could test this because it's a great way to use futures volume to confirm price, which you cannot do. Well, you can do obviously in spot FX as you get broker data for like client positioning, etc., but it's quite limited really compared to the size of FX futures and the way it's a little bit more reliable, I think. But again, you could do a study on that. But anecdotally, I think it's really safe to say that the broker's data is not centralized, therefore it's a bit more broken in that respect. So I would use that for that reason, because you get that consistency of the quality of the data, and I think also the position size, maybe it's a bit more, because the FX market is one of the largest markets in the world. We keep hearing that, obviously, it's like trillions, but essentially when you break it down, when it comes to the currency pair that you trade, and it comes down to that, it gets reduced, and then you go further down to a particular broker that does say retail trading FX, spot FX. It's a smaller chunk of the cake. It's quite small actually compared to, say, the size of a central bank that manages that particular currency positioning and exposure. So I think it's really important to have the futures space for FX, and volume is useful that way. Another thing that I use as well is again from CME Group, Chicago Mercantile Exchange. Their open interest data is fantastic because we have again a centralized source. So I go to select product, and then in there you can see there's foreign exchange. And in foreign exchange, essentially I have my FX majors, Euro USD. So select that, and you have all your contracts there. And what I would say to you is, if you try and look for the calls and puts change, if you look at open interest call and put change, okay, because that gives you the relative change as opposed to the actual numbers. So you're looking how the change has been, from the previous day, or usually it's day. And so that gives you a sense of the positioning that buyers or sellers of options have actually put themselves in. And also on the side here, you can see if you're used to order flow, if you trade flow, and that's the kind of thing you're looking at, the market structure and how prices are, bid and ask, how prices are bid up a scale of prices. This is kind of how it is. It's structured that way. And it's almost like volume at price. If you get those charts with the histograms, the bars coming from the sides, it's kind of like that. It's more like a numerical representation of that, but you can see where the chunks of orders are waiting to buy up a particular currency, so where they're bidding or asking. And that's basically what we see here. Here are the strike prices, and you can see quite handily, they're basically divided into halves and also quarters, actually. Now, if I do that, which is calls and puts as opposed to change, you see how that looks a little bit different. But again, instead of having colors, etc., you've got plus and minuses. But generally, actually, you don't have plus and minuses in this particular example. But you still have the different degrees of green, etc. And you can see here, the deeper the green, the higher the number of contracts. And then you have to go and look at calls and puts and see where they're positioned. So let's kind of go back to the change, and that basically is split this way. Calls and puts you can do by total. So if you look at now, the last time we looked at these, fair to be said for USD, has been a few months, but only a few months. We're talking maybe 2-3 months, so not a huge amount of time. And these used to be 50s, 120, 50, 120, 119, 50, etc. They've introduced 25 points. Now, I'm not sure if this is to do with the fact that the micro contracts have been introduced by CME for futures. There used to be mini contracts. Obviously, now they've got micros as well. Whether it's because of that, I don't know. But obviously, they've divided it into smaller chunks. Whether this is relative to how much volatility there is. So as prices shoot up by, say, 100 pips in a single day, etc., and whether that that range shrinks on this particular layout, I don't know. But essentially, now we've got quarter points as well, so 25 pip changes, which is handy. So it's actually good to have that. I essentially look for round number levels, so 120, 121, etc. I'm more interested in that than in the halves and the quarters, because it gives me a sense of direction rather than a kind of an eagle eye view. So at the moment, if you go back to USD, here I'm again, we are at 121.18. That's on the spot side. And then if we look here, we've got 121 there. So 121, not a huge amount of change for the calls. That's kind of, we're quite close to that price level there. So if you look across to in time going forward, there isn't really a huge amount of difference. But actually what I'm interested in is the price at 120, for example. Again, there isn't a huge amount of interest there. But if we go to 122, which is the next level up, we have 122.50. There's been a massive increase in contrast, you can see there. Okay, so that's 1,700. That's the percentage change in terms of contracts, and positive change. So calls, so buying at 122.25, massively increased. Okay, and tiny decrease in puts, but still a decrease at 122. So not many people selling, lots of people buying just above that. So that gives me a sense that there is a need to want to buy at or above 122. And as I said yesterday, we have a slight uptrend showing itself here, so that we know that's the direction of trade to take. With that, I think I made a trend line there, and I was saying that we've got the 100-day moving average kind of supporting that move as well. So given all that, we've got a lot to think about in terms of options pointing to 122 as a possible area of interest. The buying volume has been sustained on the futures side since Friday, more or less. And the other thing that I'm going to look at today is the COT data. The COT data, usually comes out once a week. The Commitment of Traders report. But if you look at the charts from bar chart, they are really handy because they really give us a sense of where we are with the where they are with the positioning of traders. So the positioning of traders, we want to look at different sides. The commercials in red, where I'm pointing here, in the first quadrant and first window here under the chart, they obviously they always take the opposite side, obviously, because they are selling what other people are buying. They're the sell side. So when we see the green line there, which is the large speculators, back in July to October, essentially, of last year, there's a big increase there, and you see price increasing. Now, generally speaking, the buy side lags price, so we see that the price here has reacted just a little bit before the move, but they're pretty much hand in hand. And then we've got a dip here, and there's a big congestion area, and that's sort of around the October, November into December, and then a dip, and it has kind of risen a little bit, but again, it's a bit muted. And so you see this where we're at. So that doesn't really tell us necessarily. And if you look at the second quadrant here, the sort of the breakdown, we've got dealer intermediary, asset manager, and leverage funds. The green, the asset managers, have been slightly on the rise. If you look at the figures there and kind of scanning through from the last one there, okay, so the asset managers are 326,695, and then before that it was 333, 331, 327, 330. So pretty stable, if not flat. The ones which are really the worst for change are the leverage funds. They tend to be quite near the zero change, or have been. So I'm looking at a few weeks and months. They're not really steered that far. The asset managers tend to be a little bit clearly marked out of the pack. So this sometimes give you clear trends, But in truth, it doesn't really help us as much as what we're seeing with the CME data, for daily volume, etc. And once you break this down into smaller chunks of price, these lines are so stretched that it's really hard to make heads or tails visually as to where price is going. Of course, you can look at the data, and it'd be really good to do a study of this, really, hypothesis, where you see the COT data, you put the volume from futures and the change from options, package it all into a sort of series of indicators, plot them onto a chart, and do a study of signals between price levels and volume change and open interest change in options, for example, as well as COT. Of course, I don't have the know-how to do that, so these are just ideas. I tend to look at them like this, see if there's any kind of indication as to where price might be going, especially when we are hitting a congestion area in your USD. I tend to go to those as a sort of way to divine the future of price movements. But it does sometimes just confirm what you can see on a chart, and sometimes it confirms that what you see on a chart is indecision. I mean, it doesn't really add anything. So these are the things I want to talk about: futures, FX, and their volume data, option interest, and the percentage change for calls and puts on euro options from CME, and then the COT data on barchart.com. And I hope you found this useful, and I hope that you will be successful in your trading, whether it's Euro USD or any other currency pair. And I look forward to seeing you in my next video. Thanks for commenting, subscribe, and like. Bye.